Let's make sure it perfect. Make sure it does everything that it's meant to do. So hello, everybody. Hope you are well. Guys, very dynamic. Guys, very dynamic day in the markets. Absolutely no doubt about that. It was quite incredible. The flip side of that, thanks for saying, oh, that's a Suzanne, my absolute pleasure. So guys and girls, welcome to our third masterclass for November. So I promised a month of masterclasses. So Thursday just happened to be the day. Now today's been a busy day, guys, as you can no doubt imagine. It's been busy. I'm very happy with the profit, guys, that came out of the room again today, guys. Static chart, really easy to trade today. Dynamic entries, guys, are a little bit more difficult, but suffice to say, again, the markets move really well. So, guys, tonight, masterclass number 3, we're going to do Fibonacci. Now, I want to do a little bit of background work on Fibonacci first, and then a number of people have actually said, Lockie, can we do like a full Fibonacci build? Okay, can we do a full build? The answer is yes, we can. No, so we'll do that for you. Guys, and we should go through a lot of fun. So, guys, and we've got a lot to cover, so I'll get a wriggle on. Guys, now, interesting point, if I can, Fibonacci goes back a very long way, now, ultimately, guys, the Fibonacci grid, if you know the history of the Fibonacci grid, does anyone know the history of Fibonacci? But ultimately, the original Fibonacci grid came from, people, the Italian mathematician, actually, Fibonacci, dropping stones, so dropping literally stones in a pond and measuring the distance between the rings that were created by the stone. So literally dropped it in, measured the rings. Now, I don't know how many times he's done that, guys and girls, to work out this natural rhythm in nature. Some people, guys, also refer to it as the golden spiral. That's what it is. So the Fib sequence for us is basically, it's more than 2,000 years old. The Fib sequence, as it is referred to, some people say Fib grid, if you want. It just maps rhythm in the world, and we basically applied a mathematical formula. Well, I didn't. So very smart mathematicians applied a mathematical formula to it. Whereas the beauty of what we do is, because we are mathematical-based traders, Fibonacci works very well in our favor. It's because every trader globally sees the same thing at the same time. Because we are futures traders, Fibonacci works really well. Now, to draw a correlation, guys, if we were Forex traders, for example, and we had 2,000 different Forex brokers around the world, and therefore we had 2,000 different prices for the Aussie dollar all at the same time, because Fibonacci as a Forex trader does not work as well as Fibonacci for futures traders. Because at the end of the day, most professional traders using futures would have the same Fibonacci on and know how to use it effectively, because the market ultimately fails at exactly the same point over and over again. Now, the flip side of that, guys, if you were a Forex trader or a CFD trader, we had a number of CFD traders with us tonight, guys, in the trading pit session. Just so you know, guys, they were getting filled at 10 to 15 points different to where we were getting filled, okay, because they've got across the price spread that was introduced by the broker into the market. So long story short, Fibs work really well for us as futures traders, right? That's ultimately what we need to do. Now, guys, what we're doing is with the Fibonacci, we're basically applying a mathematical rhythm to the market. And that mathematical rhythm, because it is so well known and so well respected, the mathematical rhythm basically becomes a self-fulfilling prophecy. What does that mean, guys? We can get on with the job of being great traders. So, guys, that said, all the way down the bottom of there, the hint I'd like to give you straight off the bat, Fibonacci retracement grid is well known by professional traders globally. As such, the grid forms powerful support and resistance levels that we can take advantage of every time we take a trade, because ultimately they are self-fulfilling prophecies. The more people that know about Fibonacci, guys, the more fun Fibonacci becomes. Now, when we're using fibs, guys, there's two kinds of fibs. There's a Fibonacci retracement. Basically, that is designed to work out where the market is going to retrace to, or retrace back to, after it's had a big move to the high side. That being said, Fibonacci extension, guys, or some people actually call it a Fibonacci projection. Guys, that's ultimately designed to predict where the market is likely to go because of the stair step or the dominant candle in the market. Guys, now, again, with a little bit of practice on the dominant candles, you can go very well using a dominant candle extension. Guys, the more traditional extension is the ABC stair step. The ABC stair step is very easy for computer algorithms, guys, and AI algorithms, if you will. The stair step is very easy for them to spot. So running Fibonacci extensions off that stair step is very easy. guys, equally, depending on the just wait one. Guys, depending on the Fibonacci that you're using, or depending if you're using an ABC Fibonacci or a ABC Fibonacci, guys, or a stair-step Fibonacci, both of them do work. Both of them do work very, very well. Now, guys, if I can just pause for a moment. I've got Ahmed texting me saying he can't find the link. Hold on one sec. I'll cut this out, guys, of the recording. So how far are we in? 7 minutes. Okay, so remember 0. Okay, perfect. All right, so let's keep going, guys. Point number 2, understanding when to use each variety of Fibonacci is critical to your success as a trader in futures trading. Now, mind you, guys, when I first started trading, sort of 2009, I started gathering some momentum. I didn't really know Fibonacci at all. Fibonacci was a major sort of realization for me. It's like, wow, this stuff is really good. What I would suggest, guys, from sort of early 2010, when I really understood how to use Fibonacci, nothing has changed in the game of Fibonacci other than I've added a 90% Fibonacci level on, because I saw the market constantly failing below the 76s. A couple of traders, Steve in particular, mentioned the 90% Fib. I know, guys, again, I'm really open to experienced traders saying, hey, Lockie, check this out. I'm certainly not open to inexperienced traders, guys, or opinionists. Right? There's a lot of people out there in the world. So, oh, Lockie, what about this Fib? What about that Fib? What about this Fib? Guys, there could be a million Fibonacci's on your chart. The funny thing being is that we always focus on the Fibs that work. We always discount the Fibs that don't. Predominantly, there's 2 kinds of Fibs. There's round number Fibonacci's, which are the really easy ones. There's fractional Fibonacci's, which are actually mathematically more correct. So therefore, we use a combination of round number Fibs, like for example, the 50, guys, the 100, the 200, and similar things. But we also combine that with the fractionals, like the 133, the 141.4, 161.8, and similar things. Simply because, guys, the fractionals are more mathematically correct. Now, you can have an argument all day with somebody who doesn't believe in that. Guys, at the end of the day, your performance as a professional trader using Fibonacci will ultimately determine if you can use Fibs. And Craig, so shout to you, mate. Guys, Craig's put, for those that can't see the chat, Craig's actually said, great session today, Lockie, sensational calling, hats off. Mate, I appreciate that, guys. Today was really busy. We had, I don't know the exact number, but I did see over 80 traders logged into the Zoom, not to mention those people that were watching on YouTube and Instagram and Twitter and So suffice to say, probably way over 100 people watching today. Guys, but all I did is default back to Fibonacci and pivots because it was a no news day, except for people obviously moving ICBMs around, which could be a little bit offensive if you lived in the UK. Now, guys, a little hint down the bottom, due to the large number of professional traders using Fibs as a basis for their trading, Fibs can often be more powerful than far more accurate than lesser known indicators like RSIs, MACDs, ADIs, and VWAPs. I'm not even going to get into VWAP. Some of you might know what I'm talking about on this one, but a VWAP, just so everybody's aware, a VWAP is designed to be used on daily and weekly charts. It's not designed to be used on a 5-minute chart. And yet someone in the world has decided, oh, I'll check out this VWAP on a 5-minute chart. Guys, that would be like putting a tractor tire on a Ferrari. Guys, the tractor tire is not designed for a Ferrari, and the Ferrari is not designed for a tractor tire. So one thing I think we do need to be aware of, guys and girls, if we can, when we talk about Fibonacci, is Fibonacci is perfectly designed for exactly what we do on a 5-minute chart, a 15, 60-minute chart, 4-hour and daily chart, perfectly. If you go and grab something that is not designed for what we do and you try and retrofit it, guys, that's normally when you get into trouble. Okay, so you just got to be a little bit careful that what we're going to be doing tonight, guys, not only applies to all of the charts we trade, it has been proven by me for the last 14 years. James, I actually do have a Lamborghini tractor at the farm, so that's why I don't use Lamborghinis. But we do have a Lamborghini tractor at the farm. It's actually one of the best, just beside the John Deere, is probably the best. That's the best one we've ever had. so yes, guys, I do own a Lamborghini. It's a tractor. Yeah. So anyway, moving on. I don't think a Lamborghini would be appropriate with three little chickens. Moving on. I said when we're using a Fibonacci retracement, guys and girls, what we're ultimately doing is we're mapping where the market is likely to retrace to after a sustained push in a direction. There's ultimately two rules that must be remembered when using a Fib retracement. First rule, Ahmed, you got in. Well done, mate. That's fantastic, guys. If you're seeking to trade down, you must draw your Fibonacci up. Guys, if you're seeking to trade up, you must draw your Fibonacci down. Now, the fastest way to draw an accurate short-term Fibonacci is to follow the stair step in the market. Because ultimately, you are going to be following the stair step in the market with the intent of trading back against that stair step, trying to find where the key Fibonacci's are, such as the 50 and the 76. Guys, please note, and this is a really, really hot topic, guys, please note that Fibonacci is not palindromic. This fascinates me. The clowns out there in the world, there's some on the Gold Coast, but they argue, guys, that it doesn't matter which way your Fibonacci is. Now, guys, I can tell you that's categorically wrong. The reason being is 808 is a palindromic number. What does that mean? 808, if you read it forward, it's 808. If you read it backwards, it's 808. It's palindromic. Fibonacci is not palindromic. Guys, now, if you believe that Fibonacci is palindromic, that means the 23.6 is the same as the 76.4. Now, how many times today, guys, did we pick up a stunning reversal off the 76.4? Multiple times on every single market. How many times did we pick up a reversal off the 23.6? Never. So which is more powerful, the 76.4? Is Fibonacci palindromic? No, it must be used in the right direction. Guys, now again, in the 101 course where this particular slide is from, guys, in the live market replay chapters, I show you exactly how to draw your Fibonacci. Mind you, tonight we're going to be doing exactly the same thing. Now, point number 4, guys, please note that you are unlikely to draw your Fibonacci retracement or extension back in time. Okay, so what you'll find is the spine of the Fibonacci, guys, is always going to be drawn from left to right. Now, I'll show you exactly what I mean by that. The spine is the center line that basically joins 0 to 100 and everything in between. All right, so if you're drawing your Fibonacci from left to right, you know you're on the right side of the market. If you're drawing it from right to left, guys, there's normally a better Fibonacci for you to draw. Okay, just a little tip if I can. Now, a hint, guys, down the bottom as a 5-minute chart trader, you can seek to use the 5-minute chart, 60-minute, 240, and 1440, guys, charts in order to draw your Fibonacci retracements. A big warning for everybody, particularly those that may have come from Forex, is we don't use daily charts. We use 1440-minute charts. Now, again, some people would say, but Lockie, there's 1440 minutes in a day. Does it really make a difference? Guys and girls, bigger than God's undies different. The reason being is the Fibonacci on a daily chart is normally and quite often completely different to a 1440-minute chart because the daily candle normally, guys, cuts off either 15, 30, or 45 minutes before the 1440 chart. So the 1440, just so you know, is significantly more accurate than the daily chart. Just so you know. Okay, just so you know. Now, more on the Fib retrace, guys and girls, if I can. All right, let me build this slide. Let me build this slide for you. So when using Fibonacci retracement, it's critical that you're making, okay, guys, it's critical that you're marking, so marking, not making, marking and hence trading against the correct short-term trend. So there's two short-term trends. Guys, there's going to be a micro trend and there's also going to be a stair step. Now, sometimes we do ignore the micro trend Fibonacci when we do have a larger chart trade. So guys, today, for example, we had a 15-minute chart static bar reversal. That means that the 15-minute fibs are going to hold and normally the 5-minute charts don't and vice versa. So that's why, guys and girls, your best workspace, okay, will have your 5-minute chart on the right-hand side of the screen, and then you'll have your 15-minute chart, 30-minute chart, and your 60-minute chart on the left-hand side of the screen as references. Wherever you find the cleanest stair step, that's the Fibonacci that is ultimately going to dominate your trading session. Now, let me just read that. Okay, perfect. So, guys, if you're marking a short-term trend, so the market has moved down, let's say it moved down 150 ticks to the downside, right, then you draw your Fibonacci over that, and then the market actually moves outside that Fibonacci, or outside that Fibonacci you've drawn. Guys, naturally, your fib is basically expired. It's no longer valid, and what you would need to do is look for a larger trend or a larger chart to complement that. I'll show you what I mean on that very shortly. We're basically always seeking to use a Fibonacci retracement to identify stall points in the market. Now, these become very, very obvious, guys, very obvious over time. It does take a little bit of practice, guys, to get Fibonacci right. But once you've got it right, even today, guys, Cody corrected me on my Fibonacci in the LTR. I very much appreciate that because we picked up an absolutely stunning reversal based on that Fibonacci correction. And that brings up a great point. As Fibonacci is not a personal journey, it's not a challenge. So what it ultimately means is if you draw your Fibonacci on, so let's say you were to draw your Fibonacci on the 4-hour chart and you can't get any matches on the 60-minute chart, that rewind. If you ever want to confirm your Fibonacci is correct, right? So if you draw your Fibonacci on the daily chart, you check it on the 4-hour chart. If you draw your Fib on the 4-hour chart, you check it on the next chart down and the next chart down. So if I want to check my 15-minute fibs, guys, I use the 5-minute chart. Okay, so huge way of checking it. And what you're actually looking for, Rob, is you're looking for a triple touch. Okay, looking for a triple touch. Now, give you an idea. Give you an idea if I can. Let me show you what I mean by triple touch, because this is really simple to do. All right, so this is Cody's let me go full screen, guys. This is Cody's fib on the this is Cody's fib. Look at this. Look where they sold down to. The 133 fib extension combined with the 276s. You can't, guys, you can't make this up. You just can't make it up. Now, interesting point. If I want to know, so man, if I've drawn my Fibonacci up on the 4-hour chart in order to catch them on the way down, it's worked perfectly. If I can see 3 stunning touches, guys, 3 stunning touches. So there's 1 touch, there's 2 touch. I need 3 touches. If I can see 3 touches, I know my Fibonacci is correct. Now, faster way to check it, Rob, faster way to check it is actually bring up the 60-minute chart, because they should be touching your they should be touching your Fibonacci intimately on 1 chart down. All right, so guys, have a look at this. All right, again, I just happened to mention it. So have a look at this. Would you guys reckon that's an intimate touch just there? Then we've got another one there, which is perfect. And then they've cruised down and they've touched this one right here. What you're looking for, Rob, is you're looking for 3 touches. Now, the reason you're doing this, now, guys, I didn't invent this. I got taught this by a very talented trader at a very smart bank. The reason we use 3 touches, mate, is if I pass the 3 touch test, then I know my Fibonacci is the same as Macquarie Bank. So who's going to win this game? I am. Not to be rude. So it's not to be a smart ass, but again, how do I check my Fibonacci on a daily basis? Because again, as you probably appreciate, a fair bit going on, guys, at the start of the LTR. I always drop down one. I always drop down a fib level. Now we'll do a full build, guys. We'll do a full build on the fib in a sec. So you guys will be in a good place. Now, guys, the replacement numbers I use, guys, these numbers, except for the 90%, these have not changed in 14 years. Okay, so as a result, they ain't going to change. The evil twins, guys, you've got the 76.4 and you've also got the 78.6. There are a number of people, guys, that put a 60 Fibonacci on the chart, 60%. I'm not being rude. It's mathematically incorrect. So the 61.8 works better. Okay, now mind you, guys and girls, if you go to YouTube and say, show me this Fibonacci, you'll end up with hundreds of opinions, vast majority of them from people that don't actually trade. Right, so what I'd be doing is I'd just be copying these numbers and you're done, like the journey's finished for you. Ahmed, yeah, 66 is mathematically incorrect. Now, interesting point, mate. If you can tell me what is the square, what is 66 the square root of? So I'd go and do that. Go and do that mathematics for me now. Again, just go and work it out. What is 66 the square root of? As the reason being is in the Fibonacci extensions, there's a whole lot of people out there in the world. Let me show you this. There you go, man. So 66. So my point, guys, my point being with Fibonacci, there's a lot of people out there in the world of extensions that say the 144 fib extension is the correct extension. It's actually not correct. It's 141.4, which is actually the square root of 2. So when people go, oh, no, I like the 144 because it's a round number, it's like, okay, well, you're mathematically incorrect. So as we could get into the pure mathematics of Fibonacci if we want to, or we could just go back 2,000 years and look at the Fibonacci numbers they had 2,000 years ago and use those. So guys, we could get right into it, guys, like 141.4 and the correlation between 141.4 and 161.8. You could also get into that as well if you want to, but tonight we're not doing that. All we want to do, guys, all we want to do is say, are my Fibonacci numbers correct? Well, if the market stopped on the 161.8 fib extension tonight, well, I don't need to do any work on that. Okay, so Ahmed, it's a great question. Right, there's people out there that swear by the 60 Fibonacci, the 66 Fibonacci. There's people that use the 72 Fibonacci. Because you would end up with so many levels, so many Fibonacci levels on your chart that you wouldn't actually know which ones to reverse off and which ones are stronger and which ones are weaker. I think, guys, the ultimate acid test, is the market failing on my Fibonacci's, yes or no? Because that's the acid test. And guys, look, again, acid test straight away. Okay, 15-minute chart. Okay, let me go full screen on this one. Okay, it won't take long. So that one's been blown up. Okay, it won't take long to work out whether your Fibonacci's are correct. Okay, so we'd be looking at this here. And if you ignore that green 38.2 for a moment, so you'd say, right, well, why did the market stop there? And why did the market stop there? And why did the market stop there? I mean, why did the market stop there? And why did it stop there? So guys, you could do what I had to do when I first started. Okay, so I literally, this is how I was taught. So I'm going to draw my Fibonacci up to catch them on the way down. Okay, it looks like they failed in the vicinity of the evil twins. Okay, all right, so cool, all right. So then what I'm going to do is I'm going to draw my Fibonacci down to catch them on the way up. Okay, now the first push up was straight to the 76s. This one is pushed beyond, basically ran into a pivot, couldn't get to the 90, got stuck and then fell down. Okay, so it looks like the market is stalling and touching at the 76s. So then I'm going to draw my Fibonacci up in order to catch them on the way down. Looks like they're failing at the 76s. Can everybody see the process of elimination here? Where you could do 50 of these in a row, go, wow, they either fail at the 61.8. Look at this, 61.8, or if they can't reach the 76s, they get caught there. We do the same exercise over and over and over and over again. Now, interesting point. What did these guys get stuck on over here? Well, what did they get stuck on here? All right, so if I need to draw my Fibonacci up to catch them on the way down, I'm going to come over here and I'm going to test this one first. Do you see? you guys see there's no need, and I'm not being rude, guys, but there's no need to go beyond what we already have. Now, you could combine Fibonacci retracement and extension. So there's the sell down. There's the buy back. These guys normally fail at the 133 fib extension. I'll have a look. So where did the NASDAQ fail after this monster sell down? Where did they fail? At the 133 fib extension. So guys, you see these numbers going around over and over and over again. Now, I was trained how to do this, guys, by Rich Malcolm in the US. So he was my first sort of trading teacher. And he basically said, Lockie, these are the numbers that I use. Ash, the 50% in our pivots. Yes, 100%, Ash. It's the 50% fib of the day. Dan, that's a great question. They normally don't. They start at the 15-minute chart and go up from there. But mind you, my knowledge is about 10 years old. So they might be using it at 5-minute fibs. I know their robots would be trading off the 5-minute fibs, in my humble opinion. Now, mind you, Dan, if the robots weren't trading off our Fibonacci's wouldn't be working. So if you wanted like a quality control, say, right, well, did they fail? Did they, for example, guys, on the FTX at the moment, they bought the market up, failed at the 76, turned around and gone straight back the other way. So are our Fibonacci's working? Yes. So therefore the banks must be using them, otherwise it wouldn't work. Dan, great question, mate, because in context with the wider market, our Fibonacci's wouldn't be working if thousands of people weren't trying to do the same, even if those thousands of people are auto trading robots in banks. Great question. Guys, now a hint down the bottom, guys, due to the complexity fib grids may add to your charts, only have one fib grid per chart, guys. So literally one on the 4-hour, one on the 60. Again, below 60, guys, the 30 and the 15, I normally don't have Fibonacci's on the 30 and the 15 unless the market calls for it. Because what you normally do, guys, you can actually over fib your charts where you end up with too many Fibonacci's on your chart. And as a result of too many Fibonacci's, guys, you're like, oh, lucky there's all these barriers everywhere. I can't actually take a trade. So you've got to be a little bit careful with over fibbing, so to speak. Now, guys, as the primary trading chart is the 5-minute chart, the 5-minute fib grid is best for short-term trend trades. Guys, we also love the daily fib, guys, to identify macro level stalling points. But now, interesting point, just so you know, guys, the bigger the Fibonacci gets, like the 4 hour, compared to the weekly chart would be a bit of an area weapon compared to the 4 hour chart. So typically, guys, we don't need to go beyond, honestly, we don't need to go beyond a daily chart because we are ultimately 5-minute chart traders. Now, guys, the fib retracement, I borrowed a graphic, guys, from the 101 course. Now, what we've got here is this perfect, so 3-phase buyer move to the high side. So this is a lot like what we were doing last night, guys, in coaching. Guys, ultimately what we do is we draw our Fibonacci up the cleanest ABC stair step, as that is normally the stair step that will be most obvious to most traders, right? So you see this beautiful stair step we've got here. Guys, what happens is we've got basically, I've now done this quite deliberately. We've got 3 beautiful steps in the stumble. What normally then occurs, guys, is we get at the top of the chart, you'll get the buyers failing to close an ABC pattern long. So if they fail to close an ABC pattern long, then the sellers will normally, guys, try and slam in and take advantage of that. Let me move this away, move that away, move that away. That's what the sellers will normally do, right? So you've got 3 steps in the stumble. As the sellers see that and go, ha, ha, I've got you. So ultimately, guys, the hint down the bottom, when we see the buyers failing, guys, we get ready to use a Fibonacci retracement to ultimately determine how far the sellers will go when they take advantage of the market. We do this by drawing a Fibonacci retracement up to catch the sellers on the way back down. Guys, they are our key Fibonacci levels. They haven't changed except for the addition of the 90%. Guys, they haven't ultimately changed since 2010. What that fib looks like, guys, you've got your base number down the bottom, otherwise known as the anchor. Guys, you've got your 100% anchor at the top, and then you've ultimately got the 50%, which is where the market is most likely to return to. So the question before, Ash, the 50% in our pivots is a fib. It's a 50% of the day, and it is a very, very powerful pivot in its own right because so many people honor it. So, mate, what we've then got, guys, the next most powerful is the evil twins, noting that the market is not palindromic, guys. So note here, the market did not stop at the 23.6. It stopped at the 76.8. Just harping on that point a couple of times. Guys, and in the middle, we've got the 61.8. I don't really pay much attention to the 61.8, guys, unless the market stalls there. 38.2. Guys, that's normally a retracement point before they take off. So if they break through the 38.2, then it's all over bar the shouting, and you normally get a really nice sell to the downside. So what I'm going to do, guys, I'm going to jump into the charts from tonight. I do want to show you straight away, if I can, is what the FDAX is doing at the moment, because it happens to be rolling off Fibonacci's perfectly. So remember how we said before, isn't it amazing that these guys have stalled, guys, at dual 76s and the 131 that 133 fib extension? So guys, if I was trading the FDAX after the LTR closed, all right, what do you guys see here? What do you guys see here? There's 2 things you're going to see. Guys, you're going to see something here and you're going to see something there. What do you guys see? Guys, let me just bring this arrow down. Okay, now some of you are looking at this saying, Lockie, I see a little green candle and I see a red one. Okay, I'll tell you what I see. Guys, I see 2 static bar reversals long, guys, off the 78.6 Fibonacci on the 4 hour chart. Now, why are they static bar reversals? Because the green candle, guys, is 2 to 3 times smaller than the lead-in red ones. Okay, so let me have a look. 2 to 3 times smaller than the lead-in red ones. This one is even smaller again. Guys, so this is the stronger of the candles because the body is slightly smaller than that one. Guys, see that delta right there sitting outside the range of the static bar reversal. Guys, you've got a V1 and a V2 delta triggering at the same time. Guys, that little thing there, I know it looks tiny, but that little thing there is enough to reverse the market. So what have we got? We've got 2 ratio-based. Oh my gosh, just look at this. Guys, where did this delta trigger? Where did this delta trigger? Have a look. And where did that delta trigger? So what it means, guys, what it means is there's banks and algorithms out there that are trading ratios. They're basically saying, you know what, the market has lost steam. We're going to turn around. We're going to send it back the other way. Now, the beauty of that, guys, is we've already got these people outflanked. We know exactly what they're doing. Guys, the more they do it, the more it means that our strategy, and I don't want to get excited, our strategy is just going to produce more and more and more winning trades, and it's going to move faster and faster and faster. Guys, now the beauty of that is the more people that leave Forex trading and leave CFD trading and come to futures trading, guys, the more people that do that, the faster the algorithm gets. Guys, so what does it mean? Guys, unlike Forex, and I'm not bashing Forex, Forex is not a self-fulfilling prophecy, guys. Now, let me explain why, if I can. Okay, and we're gonna focus on this right here. Can everybody see that these guys have retraced back up to the 50% of the day and then fallen away perfectly? Can everybody see they've come down here, touched the 78.6 perfectly, then given us a delta outside the range of a static bar reversal, which has flown to target perfectly. This is, in fact, you know what, guys? I wonder where these guys failed on the way up. All right, so we're going to draw a Fibonacci down in order to catch them on the way up. Okay. Can everybody see they've literally failed at the 78.6, turned around and gone straight back the other way? Now, the reason they've done this, guys, the reason that's algorithmically a 4-point turning bar, increasing territory on decreasing volume. What's the market's response over 15 minutes? Sold down. Why is this so accurate? Guys, it's so accurate because there is one FDAX 50 fib of the day for every single trader globally, and that's where it is. Little comparison, guys. If we were a Forex trader or a CFD trader, let's say there's 2,000 different Forex traders globally, or 2,000 different Forex brokers. There's actually around 7,000. There's around 7,000, but let's say there's 2,000 for easy maths. Because the broker controls the price of the market, guys, you might have started at a different price point. So where's your 50% Fibonacci going to be? It's going to be in a different spot to everybody else's because there's 2,000 different prices for the market all at the same time. How do you know your levels are correct? You don't. So how are you meant to trade Forex well? You're not, because you're trading against the broker. If you win, they lose. Can everybody see, guys, how the entire trading industry, because of Forex, is completely upside down? But the beauty of that, guys, the beauty of that, what advantage do we generate out of that? The advantage that we generate is that the more people that discover Forex is rigged and switch to futures, the more powerful the pivots become, the more powerful Fibonacci becomes, the more powerful pure price movement trading becomes, and all of our indicators, guys, are built off pure price movement. So what does it mean for 2025? Guys, it basically means buckle up. It is going to be hilarious, and 2026 is going to be even better. Because the more that, I mean, I'm on a big campaign over here in Japan, guys, to literally convert. It's almost like I'm running a futures trading religion. But I'm baptizing all of these failed Forex traders to futures traders, and they are blown away by the accuracy that we trade at. We actually got an email tonight from a guy that was in the trading pit. He's like, I cannot believe you're telling people where to get into the market. How is it possible that you're so accurate? So go and read the book Brokers Exposed and then come back to me. Now, I don't know if he's going to come back to me, guys and girls, but again, suffice to say, I think it's good fun. So guys, we're going to do a Fibonacci build from scratch. All right, so do a Fibonacci build from scratch. I just want to quantify something. So see this big one down the bottom here? Would everybody suggest that is a dominant candle? Okay, whatever. I'm wiggling the arrow there. Does everyone agree that's a dominant candle? Now, the reason that you would use a dominant candle, as reason you use a dominant candle extension, can anybody from down the bottom here, guys, notice there's no lower lows. So at the bottom, no one can create an ABC stair-step Fibonacci extension. So guys, the algorithms will default to this massive candle here. Now, what are the three numbers, guys, not to blow your mind, but what are the three numbers we tend to focus on the European Open and the US close, guys, with Fibonacci extensions? Okay, the 133, the 141.4, and the 161.8. Let's have a look. Guys, so we're going to draw our Fibonacci up the dominant candle, and then we're going to draw it down to the retrace. And we're going to ask the question, where did the market stop? Have a look, guys, and you tell me whether our Fibonacci is accurate. That's a live chart. There is nowhere to hide on this, guys. Now, I went downstairs after the LTR and had dinner, guys. I wasn't sitting here going, oh, wow, let's try and find a Fibonacci that makes us look good. So you've got a situation here, guys. You picked up a 133. Well, Rob, You know why it's amazing, Rob? Because this has been going on since 2010 for me, and there are still people buying $30,000 Forex courses wondering why they can't make any money. Because the reason that these guys have honored the evil twins perfectly, and then they've honored the 133 extension perfectly. You've picked up literally a reversal because they've just stolen the stair step. Look at this. So they've just stolen the stair step. Awesome, Lockie. I can't trade through a pivot. I'm not going back into the 50 of the day. I'm finding anything to reverse off. And then you've got these deltas, 1, 2, 3. There's every one of those deltas, those 3 deltas there, every one of those selling deltas after the buyers stole the stair step, failed, and then turned around, every one of those deltas has gone at least 40 points. At least 40 points into profit, and your daily KPI on the FDAX is 5. Pretty positive, guys, about 2025. Does it show? Does it show? I think it's my goes Akito's birthday today, but she's actually said, I've never seen you trade so accurately we've known each other since 2010. She, now, mind you, in 2010, she didn't have a clue what I was doing. But point being, guys, we've never traded with this accuracy before. And a big shout out to Tim, guys, for his help with the indicators, because without those, we would be less accurate. Now, what I'm going to do, guys, I'm going to do the NASDAQ because it's super popular. Guys, so we'll go full screen on the NASDAQ. Everything I say on the NASDAQ, guys, applies to all the markets simultaneously. What I'm then going to do, guys, let me go and grab the NASDAQ weekly chart. Okay, so we're going to do a full Fibonacci build for all the way down from the bottom of the jar. Okay, so let me do this for you. Okay, we can get rid of that. We don't need that. Okay, we don't need this over here. I'm going to go all the way to the monthly chart, guys, and cruise down. Okay, so let me get monthly chart. Okay, all right, so here's our monthly chart. All right, so first thing we do with Fibonacci, guys, when we're building anything, the first thing we do is look for the most recent stair step. Okay, look for the most recent stair step. Now, again, from down the bottom here, guys, from down the bottom, I'll draw it on for you. Extreme low, extreme high. There's no lower low there. Okay, so whoop, straight away, that needs to go to there. Okay, so this is step 1. This is step 2. Okay, this is step 3. Okay, so no, there goes 1, 2, 3. Interesting point. They've sold down. Guys, they've sold down. The only reason, guys, we've got a 4th phase move here. The only reason is they've got actually above over here. They've got above their record high. That was the highest the NASDAQ has ever been. Guys, mind you, this is on a monthly chart. Guys, then they just seen something blows my mind. I'll show you in a second. Now, guys, what's actually happened here? It's very, very hard to see on the monthly chart. Very hard to see, but can everybody pick? I'll get rid of that stair step. If I put my cursor there, can everybody see that this little candle here has actually made a lower low? So what actually occurred is we had 3 really nice steps. We had a 4th fatigue step. The sellers came down and stole the stair step, okay, literally by a whisker. So interesting point, guys. So the sellers stole the stair step there, and it was only with the record high recently that the buyers actually took the stair step back. So what does this mean, guys? At this point in time, my monthly Fibonacci, because the buyers have just stolen the stair step, my monthly Fibonacci, I'll put snap mode on for you. Really important, guys, snap mode, so it's nice and accurate. My monthly Fibonacci, I'm going to draw them up to catch them on the way down. Okay, now, again, I've got a monthly template in here, so I'm going to load my monthly orange. As I was building a fib recently for a guy called Roy to just show him how to do it. There's my monthly fib. Push load, push that, and I should end up with orange. Across. As what I wanted to point out to you, which just absolutely fascinates me, is this. If I can show you. So what do you guys see? What do you guys see here? So stair step, stair step, stair step, stair step. What do you guys see up here? You guys see a ratio-based static bar reversal on the monthly chart? And then you see an even higher ratio-based literally la 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 la. So this is at the end. This is the end, guys, of Donald Trump's first year. No, this is at the end of Biden's first year as president. Guys, it's a monthly static bar reversal short. What occurred? Boom, 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 boom. That's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Basically 10 months of selling on the monthly chart. Now, guys, it wouldn't take much to say, right, so they've sold down once, bought up, sold down, bought up, sold down. Okay, so we've got three-phase move down to what? A monthly static bar reversal long. What occurred? Went all the way back up here. So what are we, guys, what are we watching at this point in time? Coming into Christmas, we're basically coming into the Santa rally. So we're going to get a Santa rally. If this little candle goes, rallies up, then comes back down and closes, that little red candle right there on the NASDAQ monthly chart is a monthly static bar reversal short. Where's it going to go? The 50 fib, and then it's going to go the evil twins. If it breaks the evil twins, it's going to break the low here and it's going to bolt. Now, if we do that, guys and girls, it simply means my monthly Fibonacci would go down one level. That's all it means. I literally just moved the Fibonacci down. Because if they were to do this, guys, if we do get a big sell down and they break, come here, please. If they break outside the range of that Fibonacci, all I do is make it one step bigger. That's all I do. Literally just drop down one stair step, drop down another stair step. So that's why the stair stepping, guys, even on the monthly chart is really important. So we're going to leave that one on. Guys, now interesting, I'll now drop down to the weekly chart, which is like this. Okay, so there's my monthly fib. And guys, all I would be doing monthlies and weeklies pretty hard to pick the three touches. But what we might find, guys, on the monthly chart is if we drop down to the next chart, which is the daily, we might find three touches on our monthly fib. If we do, guess what that means? Guys, that means that, well, Fibonacci on the monthly chart is correct. Ahmed, NQ weekly loses control at the 100 extension. Not surprised, mate, not surprised at all. Now, in fact, guys, that brings up a great point. Here's our weekly chart. Okay, so who owns the stair step? So I've got, I'll put a little circle on, guys, because it makes it easier to follow what I'm doing. So there's my low point. There's my high point. Okay, there's my low point. There's my high point. There's my low point. There's my high point. There's my low point. So what have we got? 1, 2, 3 steps and a stumble and a final fourth phase, which is not going very well for them, guys. So anyway, my point being is if we wanted to try and get a correlation at the top there, we could draw a Fibonacci extension on the daily, so on these candles here on the weekly chart and ask the question, where do you guys run out of steam? Rob, look at this. Guys, not being rude, incredible. I use pink, Kenneth. I literally use pink. Now, but guys, look at this. The market, so again, this is incredible. Okay, if we start getting really, look at this. So righto, Lockie. So at this point in time, so the NASDAQ traders have created a higher high on the weekly chart, and then basically a whole lot of institutions have reversed underneath the 100 extension, which is the risk control point for anyone who's long. So I wonder why they stopped there. Well, because everyone uses the 100% as the risk control. So it's great. I'm fascinated by this. Now, at this point in time, I've got one very obvious stair step up, guys. So there's a lower low there. There's a higher high there. Very obvious. What I'm going to do is I'm going to draw my Fibonacci up on the NASDAQ weekly chart. Okay, I'm then going to double click on the Fibonacci. That's the template load, and I'm going to go for a weekly pink. Okay, this one right here, weekly pink retrace. Press OK. Right, so there's my pink. Guys, now why do I use pink? Guys, because it's really obvious. So is dark blue, so is orange. So I'm picking colors that are a long way away from each other. So when I fib the charts, I run into the pink 50. I know that my Fibonacci is correct. Now, guys, on this chart, I can tell you straight away, I can't see three touches. I mean, let me just get rid of that arrow for a moment. This is looking very exciting. But one of the fastest ways to work out whether your weekly chart is correct is to simply drop down to the 1440. Well, Rob, the beauty of it being so accurate, mate, again, is because let me put a caveat on this. I was going to say every NASDAQ trader in the world sees the same price at the same time. If you are a futures trader, Now, there will be NASDAQ traders out there using a CFD using MT4 or MT5, which is a broker-centric platform that won't have their 100 extension there. It might be 200 ticks below us or 200 ticks above us. And it's simply because the actual stair step that they've got on their charts is not defined by the stock exchange, or in our case, the futures exchange. It's defined by their broker. So even their fundamental Fibonacci's are wrong because their stair steps are wrong, because their price is wrong. And guys, those wrongs just keep compounding to the point at which you go, well, I thought we were reversing off the 100, but all of this doubt, mate, all of this doubt that comes into trading, because ultimately, mate, if not being rude, if they're trading through a broker, their charts are mathematically inaccurate. And that inaccuracy, just like Fibonacci, guys, it compounds. Let me show you. Let me show you about inaccuracy, guys. Hang on. Let me show you inaccuracy, and there'll be a bit of an aha moment here, which will be absolutely brilliant. So let's say for a Forex trader, guys, their ABC looks like this. Let's say it looks like that. Okay. But let's say for a futures trader, the ABC looks like this. Now, what's going to happen? What's the difference in the Fibonacci extension? So this is what the Forex trader will do. Forex trader will do, oh, this is absolutely brilliant, da, 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 da. The futures trader would do this. And have a look at the exponential difference in the price levels. Guys, like we're at our 130, where are we here? I have to color code it. So these are our Forex guides. Right? So I'll go to a different template. So say a 4-hour green. So you note the difference, guys. We are literally getting to our takeoff point, whereas the Forex traders are already getting to the 100 extension. So they're getting ready to short the market when we're still going long. So guys, the difference, if your price is not defined correctly, the difference in your Fibonacci is exponential. And that's why a lot of, dare I say it, Forex traders are actually making decisions, guys, making trading decisions on false information. What does this mean? Most of them are leaving Forex to come to futures. What does that mean? We're going to have a great year, guys. We did a great year. The futures show the true price of the markets. Oh, of course, Rob. There's only one price. That's a great point, mate. There's only one price for the global value of the euro versus the US dollar. It's defined by the Chicago Mercantile Exchange. There's no such thing as a global Forex exchange. It doesn't exist. Exactly right, Petros. You're exactly right. So, guys, back to Fibonacci. Yeah, of course. Now back to Fibonacci, guys. We want to know, is my pink Fibonacci correct? Fastest way to work that out is to drop down to the 1440 and ask the question, do I have 3 touches on the 1440, which is one chart down? Do I have 3 touches, guys, on my pink fib? Now, straight away, guys, I've got concerns about that fib. Okay, so see here, the pink fib, they didn't stop at the pink fib. When they went back up, they didn't stop. They went up here. That's kind of okay, guys. That's kind of okay. This candle's currently active. So that means I think there's a different weekly fib on. Guys, can everybody see that I can't find 3 matches on this chart here? All right, now my backup is to drop down one further chart. All right, so this is the daily chart, or what we call the 1440. Guys, I'll drop down to the 4-hour chart and see if I can get the touches there. If I can't get the touches there, my Fibonacci is not correct. Now, mind you, the moment I open this chart, the moment I open the chart, what can I see here? Guys, what can you guys see right there? All right, so don't be surprised. So we're currently doing a weekly fib. Guys, what have I got here? Touch 1, touch 2, touch 3. Incredible. So again, if I drop down to another level, guys, it'd be even more accurate. This down here is getting very, very close as well. Guys, that's also getting very, very close. Okay, so you can see the benefit, guys, of dropping down a level. You'll be able to actually, work out, guys, you'll be able to work out whether or not your Fibonacci is correct. Now, at this stage, guys, on the daily chart, right, so we've drawn our Fibonacci up on the weekly chart to catch them on the way down. At this point in time, guys, these sellers are having a lot of trouble, right? These sellers are having a lot of trouble selling the market down. So we could actually conclude it looks like they're going to be buying on the daily chart. So what I'm then going to do is draw my daily fib down to catch them on the way up. Now, straight away, Guys, can everybody see they're bouncing off the 23 and they're bouncing off the 38.2? Okay, now what it means is there'll be two different options, guys, for your Fibonacci here. Let me just go and get the daily blue. I'll put that on for you. There's going to be two options, guys, and visually the one that is easiest for you to spot is the one that everyone else around the world is going to be using. Okay, so the two choices are here, guys, which is the most recent push down. It's literally just buying point straight down to selling point. Okay. And you can also, at the top here, guys and girls, is a stair step. So there's the high point, there's the low point, there's the high point, there's the rundown. Okay, so therefore, one of these is going to be visually more accurate to you almost straight away. All right, so again, guys, if it's visually accurate to you, it's going to be visually accurate to everybody. So I look at this, guys, just based on this, I said, okay, I've got a loose touch at the 23, a loose touch at the 38, and I've got nowhere near the 50. All right, so that's the stair step Fibonacci. I'm going to drop it down to the micro trend Fibonacci, and straight away, guys, I've got a perfect touch on the 23, a perfect touch on the 38, and a touch of the 50. Petros, that's a great question. If we anticipate the buyers are going to move up, we draw the Fibonacci down. So in this point in time, mate, it's a really good question. There is no point, guys, there is no point. See this weekly Fibonacci we've got here, the pink one. So I've drawn, on the weekly chart, I've drawn it up to catch them on the way down. There's no point drawing my daily fib over the same level because I'm going to end up with pink and blue fibs on the same. So what I can actually do on the same level. So what I can do is say, you know what, if my pink is drawn up to catch them on the way down, I'll draw my daily down to catch them on the way up. So I've got both directions mapped. And then what I would do is ask the question, all right, Lockie, I've drawn my Fibonacci down on the daily chart here to catch them on the way back up. I'm on the 1440. The fastest way to work out whether that is accurate is drop to the 240 and look for triple touches. All right, so guys, we drop down to the 240. I'm going to say, right, show me triple touches on the blue Fibonacci. And this kind of stuff blows me away. I said, look, so touch one, perfect. Touch two, perfect. There, close of the candle, absolutely perfect. Touching and screwing around this blue Fibonacci up here, not too bad. Touch perfect on the 38. What does it mean? Exactly, Petros. 3 touches. So the really obvious ones, at this one here, really obvious. That close of the candle there, really obvious. No, not at all, Craig. That can be anywhere. That can be anywhere. So now, mind you, mate, I invented the 3-touch rule. I invented the 3-touch rule simply because I wanted to say, how many touches do I need on a Fibonacci to know it's correct? Right, so guys, you've got a touch there. So the blue is actually touched. Now, you don't want it to touch and run through it. You want it to basically, all right, so better question, guys. They've stalled there, awesome. 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 I think my Fibonacci is correct. Does everyone see the power of saying, righto, well, let me check my pink fib on the daily. Let me check my daily fib on the 40 minutes, on the 240. Now, interesting point. Most interesting point. Where am I now going to draw my 4-hour fib? Well, at this point in time, guys, these guys have clearly, so this is a 4-hour chart, they've clearly sold down. They've clearly sold down. So I wonder if they failed at a 4-hour Fibonacci. So the only way for me to work out if they failed on a 4-hour fib is to draw my fib up to catch them on the way down. Now, the moment I draw that on, what do you guys see? An exact match. So what does that mean? Guys, on the 4-hour chart, I believe that Fibonacci is correct. So what I do is I say I'm going to go and get my 240 green retrace. Guys, you'll note my names are very technical, 240 green retrace. So it tells me it's a retracement. It's off the 240-minute chart and it's green. Now I put that on and I go, you know what? If you're that good at Fibonacci, Lockie, if you're that good, we're going to find 3 touches on the next chart down. The next chart down from the 240 is the 60. So righto, show me the 3 touches, and then I know I'm in the right. Then I know I'm in the right place. Okay, let's have a look. Would you guys agree that the 60-minute chart has honored this fib right there? Okay, have a look at this here. Have a look at that there. So what does it mean today, guys? What does it mean today? And what does this ultimately mean, guys? It means this. If we could pick up a stunning NASDAQ buy signal on the 5-minute chart just after the sellers fell down and hit that, guys, if we could pick up that trade, oh my lordy, it would be amazing. If we could pick up a trade off the 50, which we did today, it would be absolutely amazing. Absolutely amazing. And mind you, that's the 60-minute chart, guys. So when looking at the 60-minute chart going, all right, well, these guys have sold down. They can't go down any further, so they're probably going to go up. So what I'm now going to do is I'm now going to draw my Fibonacci down in order to catch them on the way up. Note, guys and girls, really important point if I can. The spine of the Fibonacci is angled left to right. The spine is angled left to right. If your Fibonacci, guys, is angled like this, your Fibonacci is backwards and you're likely to make mistakes. Okay, so the spine of the Fibonacci, this is the world according to Lachlan, guys, not everybody agrees. The spine according to Lachlan is left to right. Okay, so that's the center line of the Fibonacci is always left to right. Guys, and again, we always apply the 3-touch rule. Now, I wonder if my 60-minute chart Fibonacci is correct. Well, guys, at the 60-minute chart, I could drop down to the 5. So if I was to drop down to the 5, guys, let me just get rid of all these charts. If I was to drop down to the 5, I'd probably find, particularly that 60-minute chart is really accurate. So let me get rid of the 240. So all I've done, guys, all I've done for the Fibonacci build today, now I do this every day for the live trading room, so I've had a little bit of practice, as you can probably imagine, but all I've done is I've looked at the candles moving on the chart and asked the question, are they going up or down? And depending on whether they're going up or down, I'll draw my Fibonacci in the opposite direction to what they're doing, and then I'll go and match it on a lower chart. I'll go match it on a lower chart and see what we can find. Now, so I'm just putting my workspace, just making sure I put my workspace back together. Okay, so on the 60-minute chart, this is our 60-minute chart fib. Okay, now again, if I want 3 touches, guys, I could look at the 15-minute chart would be really accurate. Okay, all right, so straight away, is that Fibonacci correct? Now this is a 60-minute chart fib. Can everybody see? Yeah, look, coming back up. Whoops, sorry, coming back up. Trying to get that arrow. Come on, arrow, please. Come on. Stupid little arrow. We'll do another one then. Fine. There's no, you're going to take my arrow away. No, there we go. So guys, have a look. So when they were coming back up, can everybody see you've got a perfect match on the 23.6? Now that is a stunning ratio, static bar reversal. Absolutely stunning ratio. Let's look for another tip. All right, you got a tip of the Fibonacci there. See that one there, guys? They've actually literally launched off the Fibonacci. Absolutely brilliant. So again, have I got 3 touches? Guys, have I got 3 touches? Yes. What would the 15-minute fib look like? Guys, the 15-minute fib would just be running from here to there. Now, there could be an aha moment here, guys. There could be an aha moment. How do I know that's the 15-minute fib? Let's have a, come on. No, I'm having a shocker with buttons. Have a look where the candle started, guys. 6 p.m. Where did the rundown stop? Wrong button. Where did the rundown stop? 6:30 p.m. So, guys, can everybody see that if it started at 6 and finished at 6:30, it's a 15-minute chart or a 30-minute chart Fibonacci? Okay, why? Because it started on the hour and finished on the half hour. It's an interesting point. As all we've done is we've gone to the biggest chart, and then we've drawn it down, drawn it down, drawn it down, drawn it down. Interesting, guys, how the 4-hour, look at this, the 4-hour, 38.2 has been touched there. It's being touched there. Look at this, this. So what did we say before? If we get back above the 4-hour 50 fib, wouldn't it be great to get a valid long? Delta, 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 delta. What was the market's response? In fact, I'll tell you why they've done that, guys. The little sniper eyes, if I can. What's the bet? These guys went down, then up, then down. So who owns the stair step? Who owns the stair step at the close of that candle? Sellers, buyers, sellers. Sellers own the stair step. What does that mean? What does that mean that little candle is? What is that? That's a ratio-based static bar reversal long with complementary V2 deltas. What was the market's response? 10, 20, 30, 40, 50, 60, almost 70 ticks in 5 minutes in your favor because you can read stair step and you can read ratio. I find, honestly, I find this hilarious. I find this hilarious because there's not a lot of trading schools in the world that do what we do. And what it means is for anyone that is competing with us, not that I believe we have any competition at all, but for anyone that is competing with us, guys, they're in the dark if they don't have our indicators, and they're in the dark if they don't understand what we do. Is anyone else excited about 2025, or am I just a little bit crazy? Seller stole the step. Exactly. So Petros, sellers stole the stair step but failed to close the ABC. So what does that mean from what we did last night, Petros? Sellers stole the stair step, so we're looking for a buy signal. Sellers failed to close the ABC, which means the buyers are coming back into the market, and then we get a ratio-based static bar reversal long with two V2 deltas in complement. Petros, I tell you what it means, mate, which is really scary. You're actually starting to read the market like a professional trader. That's exciting, Petros, because you haven't been with us very long, mate. So if you're starting to read the market like that, going, wow, there's the stair step, there's the ratio, there's the complementary signal, and there's the market's response candle. Because again, if you went long and said, Lockie, on every trade here, I'm just going to go for 20 ticks, guys, you would have picked up 20 after 20, after it just would have kept going, just 20 after 20 after 20 after 20, and just kept going. Now, something really, really funky is going on over here, guys. Obviously, big sell down today. Big sell down. Everybody's realized there's nothing really to worry about because, you know, Russia might be moving ICBMs around, but they're not firing them. So we're probably going to go back up, guys, back to the stratosphere again. But the question would be, guys, now, many of you, Ahmed, 15-minute swing trigger long, only, mate, only if we have a lower low on the 15-minute chart. Okay, so let me get rid of this. Okay, great question, guys, great question. So Ahmed's asked a really good question. Okay, so swing triggers, guys, swing triggers, we do them at the Platinum course. Swing triggers are always traded with the step and the trend. So there's this, there's this, there's this. That's the trigger point right there for a swing trigger. But what's wrong, guys? What's wrong with this trigger? So swing triggers are always traded with the step and the trend. What have we exactly right, guys? We're trading against the trend. If, and mate, it's a great question. It's like a number of people would have gone, wow, my God, I didn't know that. If we did this, buyers, lower low, come on, lower low, and then that would be a swing trigger long with step and trend on the 15-minute chart. At the moment, guys, what they're trying to do, these guys, the buyers on the 15-minute chart, are currently trying to steal the stair step again from the sellers over here. Okay, and what's the bet? They just ran into the evil twins. So there's the high point. There's the low point. There are the twins. There is no way I would be long on the NASDAQ, guys. I'd be short. Now, can you tell me, I want you, this ultimate test, guys, test of competence. Why would I be short, not long on the NASDAQ as you look at that right now? Have a look and you tell me. Straight away, some of you have gone down to the volume, gone, Lockie, we're over 80% of the previous volume. I'd say, well done. So, okay, so they're exhausting their volume. Have we got potential failure at the 76s? Yes. Have we got potential at the previous pivot? Yes. Who owns the stair step? Buyers. Awesome. If we get a big fat efficient candle closing over those, I'd be interested. In the meantime, I'd be looking for a short. Petros on the money, mate. Well done. Well done. All right. So guys, my voice is absolutely cooked. It's been a massive week, guys. I'm very excited, guys. I think we might have Cody back on the mic tomorrow because literally my voice is cooked. Back to the 5-minute chart, guys, to bring what we just did into context, Okay, now let's have a look. We know why these guys are failing. So if you waited for them to push through the previous pivot and then you went short, guys, for a 20-tick target, which is that circle, you've smacked your 20-tick target again. Just click, bang, 20, click, bang, 20, 20, 20, just over and over and over again. But you're on the money, mate. You're on the money. Now, mind you, guys, we've got to be a little bit careful because we're outside of our trading session. Guys, we're outside of the trading session. So what you want to be doing is you want to be saying, righto, well, I'm into a brand new session. So the post-Euro lunch move was here. So that's when the Europeans came back. Hang on, 5 to 6:30, 7 to 8. The Europeans have just come back from lunch. Guys, literally just came back from lunch. Like literally 5 minutes ago, they've come back from lunch. So you would need to go through the analysis, guys, like we normally do. If there's my Fibonacci down, there's this, there's that, there's this. Because again, I'm just having a look. If we're in a 60-minute swing trigger, no, 4 out, no, we've got nothing. There's nothing driving this market other than speculation at the moment. Either way, 30-minute chart. Let me have a look, mate. So those guys, great questions. These guys are step breaking. Okay, that's what they're actually doing. So for me to get a swing trigger on the 30-minute chart, it needs to be like this with the step and the trend. So at this point in time, up until a moment ago, I didn't have the step and I don't have the trend. As a result, there's no swing trigger here. Okay, so yeah, so no swing trigger. So guys, look, what we did tonight, I wanted to do a full Fibonacci build from top down to bottom about drawing a gap fib on the FDAX. Can you explain this, Craig? 100%, 100%. What's that, a 30-minute chart? I'll just go and put that back where it belongs. So the FDAX, guys, the FDAX has a little idiosyncrasy. Okay, so again, like a lot of these markets do, put that back there. So the FDAX, better example is yesterday. Look at this, just amazing. Better example is yesterday because what happened? Okay, here we go. All right, so what happened is yesterday, guys, let me get rid of that one. Okay. So yesterday we had a really, really big gap on the market. Now the gap is basically where they closed the previous day. Normally what happens is the market turns around and goes straight back down to the gap, closes the gap. Now, okay, now in the case of the FDAX, guys, in the case of the FDAX traders, what happened yesterday? So mate, Craig, no, you're all good, man. You're all good. So what happened here is that we've got this beautiful gap here. So what actually occurs at this point in time is we draw the Fibonacci up from the gap in order to catch them on the way down. All right, so this is peculiar to the FDAX. All right, so when we've got a gap close, guys, what we do is we say, righto, well, let's say the gap is the bottom of the market. Wait for these guys to run up, then they've cruised down and they've tagged this one, then they've gone back up, then they've come back down and they've tagged the 76s. Guys, so as it turns out yesterday, they didn't close their gap yesterday, guys, until we started trading today. Oh, no. They closed it after midnight last night. So interesting point. If that was where we're at, I have to refresh the chart, but if that's where we're at, there's our gap. We draw the Fibonacci up because we quite often find that the FDAX in particular and the FESX gets caught at the gap 76 versus anything else. Did everyone get that? Yeah, so it's peculiar to the FDAX, guys. It's called the gap 76. It happens at least once a week. And now people that don't know that will go, oh my God, check out that short. I'm going to go short. Then they get smacked and they're like, well, what went wrong? It's because they don't know how to trade the FDAX, guys. It took me 2 years to work out how to trade the FDAX. I just kept on getting smacked over and over and over and over and over again And eventually I worked out how to trade it. And now it is hilarious. Like, it's divine, guys. So it's not the evil, horrible thing that everybody says it is. All right, guys. So on that note, I'm going to run. I hope you guys have learned lots. Guys, hope you've learned a lot. So that is our basically, guys, our masterclass on Fibonacci, but that was very much an intro, guys, because we didn't get anywhere near Fibonacci extensions or We did mention them, but we didn't get to them in detail. Guys, all of that, guys, we do a lot more detail on that, guys, off the back of the Platinum course in advanced coaching. If you want to, guys, if you want to kind of milk the Fibonacci lemon a little bit, we do a lot of that in advanced coaching, because the assumption is at advanced coaching that you already know everything about CSA and efficiency and loss of efficiency and That's where we can actually explore those a little bit more. So, guys, I hope that was good fun. I hope that makes sense. I hope that everything is brilliant. And the flip side, guys, I'll see you in the LTR tomorrow. Now, at this stage, Cody's going to be moderating, guys. I'll have my supervisor hat on, which I'm very excited about, because my voice is about to run out of steam. So, guys, have a great night. I hope you learned lots. Hope that was good fun. I hope you can walk away from the session going, oh, there's a light bulb moment, guys. And yeah, first weekend in December, Ash, is when we launch the first platinum program for the company, which is bloody brilliant. It should be awesome. I've actually just got the workbook, guys, back from the graphic designers, and man, it's like 40 pages. It's gonna blow your mind. How do you register, guys, for platinum? Just email info@samurai-daytrading.com. So just the info address, that'll go to Craig. Guys, Craig's got a list of those people attending. I don't want more than 12 people on the course, right? So I don't want more than 12. At this point, I think we're sitting at around about 10. So I don't really want to go much beyond 12. I've got to have a one-on-one conversation with everybody, and I'm lazy. I'd prefer just to go to the gym and trade and drink coffee. So, guys, not much more than 12. The Petros, mate, I'm 50 years old. I'm allowed to call a spade, mate. I love coffee. I love the gym. I love skateboarding and spending time with my kids. So it's about 12, guys. 12 is a really good number. It's a really good number. All right, guys, have a great night. Thank you. I hope you're amazing wherever you are in the world. Great. You're a funny, mate. Yeah, Suzanne, minus the skateboard. We can dress you up as RoboCop, Suzanne. You'll be fine on a skateboard. Just lots of pads, helmets. Yeah, I look like a RoboCop when I'm on there. Guys, have a great night. Well done. We belted the markets today, so it's off to have birthday cake. So, guys, over here in Japan, it's birthday cake and whiskey time. So I will be in Global Sim when I come back from that. And, guys, I'll see you in the LTR tomorrow. Have a great night, guys. I'll see you soon. Bye.